What's up everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we had another relatively flat day, but we actually see the Russell 2000 is starting to sell off. So I really want to spend some extra time in today's episode to help you prepare for what could be coming in the near future. So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY, like I said in the intro, we had a relatively flat day today, only going up about 0.12%. We did close back above that resistance level right around 406, and we could be well on our way towards our price target at 410. Remember back the last couple of days that we were closing above the upper Bollinger Band, and that's why we really can't go much higher until we cool off. So we continue to see the price action trading sideways, and we're now getting an expansion of those Bollinger Bands, which will allow the price action to go higher. We're still in a very strong bull trend with all the moving averages stacked to the bull side, and there's no doubt that we're looking a little bit parabolic. You could see the 5 EMA is basically going up in a straight line, and it has no signs of cooling off. The other warning sign is the gap below, which won't close until we get back down to about $400.60. So I still maintain the message that I want you to be cautiously bullish, and I'm calling it cautiously bullish because we do have bullish price action with a bullish trend. I'm not in the business of calling a market top, but I do want to sound some warning signals for you to pay attention to, and I want to give you something to think about. So right now we could be ending a very critical market cycle, which will lead to a correction cycle that follows. We see the S&P 500 is meeting some of my price targets, and we're getting very close to the next price target at 410. That doesn't mean we can't go higher, but I want you to be very cautious the higher we go, and the best way to be cautious is to raise more and more cash the higher we go. Now I also want you to think about something very closely. There was a CNBC article I saw getting passed around on my Discord server, which said that Tom Lee thinks the S&P 500 is going to go to 4,200 in the month of April, and then he thinks that that will call a market top for the year. So just think about that for 1 second. If the smart money thinks that the top of the market is SPX levels of 4,200, why would they be wanting to advertise that and telling the retailers that that's where they think the market's going to top out at? It's more than likely that the market's going to top out before those levels, because who do you think that smart money and that big money sells to? They're dumping their positions off to the retailers who don't realize that we're nearing an important market top. I'm not saying that to scare you. I'm saying that to just give you some extra thought. In our weekend episodes, we always look at the Bear Bull survey, and I've made it very clear that there's a lot of retail greed because we see close to 50% of the retail sentiment is still bullish, and we're going to near all-time highs at a very critical market cycle. So that doesn't mean we can't go higher, and that doesn't mean that I'm going to turn bearish on you all. I'm just trying to give you some food for thought as we go higher. I really want you to be disciplined, and I don't want to see you get caught in a market correction and lose all of your money. I'm saying it's in your best interest to take a very close look at your portfolio and understand where your risk and reward is lying. If you're continually loading into call options and long positions the higher we go, you're not playing this game with the proper risk reward ratios. As we go higher, you want to reduce risk, and as we go lower, you can take on more risk. So right now, define your risk as the gap levels below at 400 and right around 398. There is a lot of potential downside with these gaps, and they could get filled at any moment. I also want to point your attention to how low the volume has been the last couple of days, which means that there's absolutely no sellers out there. The moment we see sellers stepping in, and those will be the big money and the smart money, and they have huge positions that they can offload as fast as they want to, which could lead to very drastic selling. Remember, the market takes the stairs up and the elevator down, and we've essentially taken the elevator up. We've basically gone up parabolically in a straight line. Ever since the low back at the end of March, we've just been climbing very quickly, and we could easily go down just as fast or even faster as we went up. So that's the warning message I want to get across to you today, and I'm going to leave it there, and we'll get back into the technical analysis. So just a quick summary on SPY. We're currently holding up above that price target at 406 with the outstanding price target above at 410. Downside support could be the top of the gap at 403 or the gap fill at 400, and we're still going to have support right around 397 and the 20 simple moving average, which is now going to be right around 396. On the NASDAQ 100 Triple Qs ETF, we also had a flat day, only going up about 0.25%, and we're still hanging around this bull flag area right above that upper Bollinger Band. Just like with the SPY, we needed time to cool off because the last 2 trading sessions were outside the upper Bollinger Band. So we're now back within the Bollinger Bands, and they will continue to expand, which means we should have no trouble getting up to that price target at 334. Remember that 334 is a very critical level, and at that level we want to get very defensive because we still have a lot of downside gaps that we could fill. Any of these price targets I'm giving you could trigger a stock market correction. Remember that if the triple Qs fail to break above 334, that will be a lower high on the daily chart because the last all-time high was 336. If we can break above 334, that's going to heavily increase the probability that we can go to an all-time high around 341. Downside support levels are going to be 328, the gap fill, which is right around 324, and we will have another gap fill below that around 321. The 20 simple moving average did cross back above the 50 EMA today, which is a bullish indication that we're back into a bull trend. And normally when you're in a bullish trend, it is a buy the dip market. So we're going to be looking for opportunities to buy off of strong support levels on the triple Qs as long as we continue to show bullish price action with a bullish trend. So we have the bullish price action with the bullish trend, but we still do have downside risk defined around 324 and 321. So remember, the closer we get to 334, the risk reward ratio is not in your favor if you're trading to the long position. Just in case we get rejected at that level, we could go much lower. So understand your risk and make sure you're defining your exit strategies. Remember, when the triple Qs are going into a bull market, we're likely going to see the rest of the tech sector and other tech stocks also go into a bull market. So that's why you've seen Amazon, Apple, Facebook, Microsoft, and Google doing very well, is because they are the stocks driving the triple Qs in the NASDAQ 100, and we're going back into a bull trend on this sector. On the Dow Jones ETF, we were flat on the day, basically going absolutely nowhere, but we did push down on that gap a little bit, and we did put a little downward pressure. We closed the gap just a little bit, and the top of the gap is now right around 333.40. The gap will close at a price target of about 331.60, and we still do have support at the previous all-time high around 330. The 20 simple moving average is now at 329, and we would need to see a price action close below the 20 simple moving average to start seeing some weakness in this bull market. The upside price target is still 336, and remember that we're getting very close to all of my price targets as we approach SPY 410, triple Qs of 334, and the Dow Jones of 336. We're increasing the probability that we could go through a stock market correction. So be very aware of these levels and watch the price action very closely. We still have bullish price action with a bullish trend, so it's very likely we're going to hit that price target. On the Russell 2000, we had the worst day of all, going down 1.61% on a day that the rest of the indices actually did pretty well considering they didn't go down. The Russell 2000 could be telling us a warning sign because it does look like it's already going into a correction. We got a price action close back below the 20 simple moving average, and we don't have any trend for the bears or the bulls. If we can't hold up above the 50 EMA at 218.50, that's going to be a bear market, and it means we're likely going down to retest the trend line at 205. So remember, price action below the 50 EMA is bearish, and you could see that we are putting in a lower high on the daily chart, and now it's a question of whether or not we're going to put in a lower low. So watch 218.50 as critical support, and if we break down below that, you're more than likely going to see the Russell 2000 come down to 205. Upside resistance is going to be the 20 simple moving average at 224, and our other resistance levels are at 227 and 233. As you can tell from the Russell 2000, it's not in a bullish trend, so I don't want you taking long trades on the Russell 2000 unless you're getting in and getting out at very critical levels. On the Arkk ETF, we dropped about 2.43% today, and it does look like Arkk is going to remain bearish. That's another price action close back below the 20 simple moving average, and we never even got up and retested resistance at the 50 EMA. So Arkk could be going back into that bear trend because all these moving averages are still very closely stacked to the bear side. We still have a gap to fill down around 115, and we will have support at the trend line around 111. Upside resistance is still going to be that 50 EMA, which is now going to be right around 126. Remember, there's no reason to get overly bullish on Arkk because it's still in a bear trend with bearish price action. On the VIX, which is our fear indicator, we do see the VIX continuing to head lower, which is a bullish sign. The VIX is still trading below 18.2, and it's continuing to form lower lows. So the lower the VIX goes, that does indicate that there's less fear in this market, and it does increase the probability that we're going to see all-time highs. So we'll likely see the VIX remain low as we continue to get closer to our price targets on SPY of around $410. That will be a brand new all-time high, and that could mean that the VIX could start spiking when we start to see an increase in selling. So the VIX is still looking bullish, but don't forget that it could spike at any time, as you've seen in the past, where we could easily see massive selling coming into this market at any point. I'm not trying to scare you, I just want you to be prepared and keep in mind that the market has had very low volume, so we're not really seeing a lot of market participants at these levels. That could be a warning sign, or that could just be a sign that there's nobody willing to sell, and that's why the market's going to continue to melt up on low volume. On gold, we cooled off a little bit today, but it still looks like we're going to continue to drift higher towards the 50 EMA at 1760. On silver, we're hanging around that support level right around $25, and we're likely heading back up to the 50 EMA at 25.68. On Bitcoin, we're currently down about 3.48% right now, and we're trading below the 20 simple moving average. Remember that in the bigger picture on Bitcoin, I am not bullish because it's too far extended on a monthly chart. I'm not expecting a huge bull run in Bitcoin for the month of April, and this is no surprise to me to see Bitcoin showing weakness. We couldn't close back above 59,000, and we were failing to put in that daily higher high on the chart. We're now seeing selling, and we're seeing an increase of volume on a red day. If Bitcoin can't hold up above this wedge or the 50 EMA right around $53,000, there will be a ton of sellers coming in, and it will easily cause a massive correction in the magnitude of about 20 to 50%. Remember, Bitcoin needs to get back above 59,000 to cancel this correction, and then that means it could get back up to 62,000 or 64,000. But right now, I think the sellers have full control of Bitcoin, and I don't think there's a lot of upside potential for the huge potential downside risk. On Amazon, we had a very bullish day today, going up 1.72%, and this is one of those stocks helping drive the triple Qs higher. We saw it bouncing off that support level at 32.22, and we did close above the resistance breakout level at 32.70. The resistance level at 32.97 did hold up, so that's still the price target we want to see Amazon try to break out above. If we can break out above that level, the next price target is all the way up here in the 33.80s. Downside support is still 32.22 and the 50 EMA right around 31.50. On Tesla stock, we continue to see weakness, and we see Tesla going down about 3% today. Tesla cannot hold up above the 50 EMA, which is a bearish indication because if it was bullish, we would have no trouble holding up above that level. We still see Tesla struggling, and it does look like it needs to hold up above the 20 simple moving average right around 665 to even have hopes of going back into a bull market. If Tesla closes below the 20 simple moving average, it's going to have a huge wave of more short sellers, and it could easily come back to 618 or all the way back down to 550. So on Tesla, if you're in this stock for the long term, that's probably okay to start accumulating, but if you're trying to trade this stock, you want to wait for a bullish confirmation, and we still have yet to get that on this stock. Watch upside resistance at the 50 EMA right around 690 and the previous high on the daily chart, which is right around 718. Remember, we need to close back above the 50 EMA, and we need to get back above to a daily higher high right above 718 before we can get back into a bull market on Tesla. On Apple stock, we had a very bullish day today, going up 1.34% and blasting through that resistance level at 127. We're now closing above the 50 EMA for 3 days in a row, and we're getting a very impulsive move. This is exactly what we want to see Apple do if we want to see higher highs on the triple Qs. Apple's a market moving stock, so if it's going back into a bull market, it is going to help bring all-time highs for the rest of the market. There will be a very critical test for Apple right around 130, and I do think this 127 level could now act as support. So Apple support is now going to be 127 and the 50 EMA at 125, with upside price targets at 130 and 132.75. On the financial sector, we went up about 0.5% today, and we're still closing over the 5 EMA with a bullish trend. On industrials, we dropped about 0.5% today, but we're still closing over the 5 EMA with a bullish trend. On the energy sector, we went up about 0.35% today, but we're still closing below the 20 simple moving average with a neutral trend, and it looks like we're coming down to retest the 50 EMA. On the healthcare sector, we dropped about 0.22% today, and we did close below the 5 EMA. We're still in a bull trend, so it's still likely that the healthcare sector wants to continue to go higher from here. So going back to the S&P 500, you can still see that we have bullish sectors basically across the board, and we still have a very low fear indicator in the VIX. We're getting very close to my upside price targets, and there's not a great risk to reward ratio for long trades at this point in time. That could easily change, but don't forget we have the gap below at $400, and this gap is very likely going to get filled. Remember that we gapped up to new all-time highs, so we haven't had that price discovery, and we still see a lot of very low volume in this market, which means we could easily see the elevator down if we start to see an increase of volume for the sellers. So right now the sellers are nowhere to be found, and we're not seeing buyers coming in either. So be very, very cautious in this market, and I would hate for you to try to buy in at the top because you're getting FOMO. And remember, I said this during the correction in the tech sector rotation, if you're not willing to buy now, don't FOMO in later at the top. This is the exact moment in time that I was referring to. So if you're starting to feel that FOMO and you weren't willing to buy at triple Qs levels of 310 and 313, then why are you getting FOMO in the 330s? So be disciplined and understand your risk, and make sure you're taking a trade that has a good amount of reward for the amount of risk that you're taking on. If you're struggling in this market or you want to be involved in a trading community, I'm giving intraday updates on the Stocks Channel Discord server. I'm also bringing brand new trade ideas weekly, and we've been absolutely crushing this market. If you're interested in the Stocks Channel Discord server, you can find out how to join by clicking on the link in the description of the video. Alright, next up, let's do a quick look at the trade idea, which is still Shopify, and we see Shopify going up 0.29% today. We're still struggling to break and close back above the 50 EMA right around 1169, but if we can break back above that level, we should have no trouble getting to the next price target at 1204. Downside support is still going to be 1135 and the 20 simple moving average at 1123. Remember, there is a gap to fill, so it is likely we retest that 20 simple moving average, and that could be the next best buying opportunity. Be patient in this market and don't take anything for granted, and make sure you're getting in and out of your trades very quickly as we continue to go higher in this market. It does look like Shopify is starting to build up a bullish trend, but it still needs to close back above the 50 EMA before we get overly bullish on this stock. It has plenty of upside price targets if we can get back above the 50 EMA, but we want to take this trade day by day and don't make any assumptions. Let the price action do the talking and let the trend continue to build up bullish. So don't forget, there's more trade ideas on the Stocks Channel Discord, and if you're interested in that, you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market. Remember to stay disciplined, and as always, I will see you in the next episode.